traders, welcome back to my channel. This is Juno with Trading the Charts Pro, and today in this video guys, we're going to be talking about Tesla, one of the hottest stocks in the market. And again, today or yesterday Tesla has announced that they are going to be splitting their stock. All right, so what does that mean for us regular retail investors? It just means that now the stock is actually going to be cheaper because they are doing a 5-to-1 split. I find this a little bit ironical because I just did a video where we were talking about the Apple split, and the Apple split is something that Apple has been doing at least 7 times in their history. All right, but now Tesla went in, analyzed the entire idea, and they have decided that they want to do a 5-to-1 split. What does that mean? It means that they're actually going to multiply all the shares that Tesla currently has times 5. So if you currently own Tesla, your one stock is going to be multiplied by 5. And so if it's 100 shares, now you will be owning 500 shares. All right, and that entire process is actually going to devalue the current share of each stock to create 5 more. Does it mean that you're going to lose money on what you have? No. Does it mean you're going to gain money? No. The only thing is going to happen is that now the price of Tesla is going to go down to around 300 or 250, depending on where the stock is currently trading at. Right now, it's a little bit over 1500, so that would be 300 plus. If it falls back down anywhere between the 400 levels, it'll be 250 plus per share. All right, so this is exciting because honestly, Tesla is the future. Autonomous drive is coming. It's going to be a part of the future. It's going to be something that we're using. Really nice technology. But as an investor specifically, if you are looking to invest for the long term, you have to try to get things at the best value possible, and then hold it to gain the appreciation over time. Currently, I do believe that Tesla is overvalued, and this is why they decide to make this move right here to preserve, the market cap of the company. Also, to have this stock price of the stock lower, so more retail investors will be able to participate in the stock, as well as fund managers will feel more comfortable if to buy the stock at 300, 350 or 250, depends on when the split takes place. All right, so the split is actually going to take place on August 21st. If you currently own the stock, August 21st, you're going to see whatever shares you have multiplied by 5, hence giving you more shares in your portfolio and lowering the price. It's not anything extra. They're just dividing or multiplying each shares down into 5, breaking down the price lower. All right, so that's going to take place in your portfolio on the 21st of August. On August 31st, in the real market or in the broader market, Tesla is going to be trading at the multitude of 5 in the broader market. So on the 31st, the price is going to move down to whether it's 300 and some or 200 and some, depending on where this price of the stock is at the time when the split takes place. Okay, so look out for that, be informed, and look for the best opportunities. All right, so now I want to bring in a little bit more information to show you why I feel like Tesla is overvalued in the short term, only in the short term, because yes, they have more products for the future, but they haven't rolled out any of those products yet. So hence, we don't have more revenue stream fully coming in and bringing in, new revenue as yet. Does that make sense? Okay. All right. So let's look at this right here, guys. So basically, the reason I feel like this stock is overvalued, Tesla has, run up 484 0.82% within the last year. That's a magnificent run. It's really good if you were able to participate. But even if the stock split and comes back down to 300, if it was overvalued, there's still a probability that this stock may pull back somewhere down to the 200 level, which will give us a nice opportunity to participate, for the longer term. Am I saying don't buy at 300? No, that's not what I'm saying. I may take a small stake at 300, knowing that if it pulls back to 200 or below, I will add to that longer term position for a long term investment, because nothing is guaranteed. It may open down here at 300, and then before you know it, the stock is back up to 500, and we miss the entire opportunity to put in our stake for the long term. But I want to be very cautious in the way I approach this, because the stock is already up 400 and some percent on the year. That's really good, but I don't want to buy at the top and then we get a pullback. I also don't want to be waiting for the bottom and then miss the entire opportunity. So this is why they say it's very good to average in when you're doing long-term investment. All right. So if you're a long-term investor, when the stock splits, it's not going to create any extra value where you're going to get it super cheaper. Just be cautious, take your position or small positions, and as the stock progress and move in your direction, you add to the position. If the stock pulls back, more than expected, then that's where you want to make sure you get your stake down in there and have that position holding for the long term, because the technology is a part of the future. I do believe they go higher long term. Okay. But I just want to be very cautious in where I buy, because I don't want to buy at the top. Now, if we're a trader, we're strictly trading off price action, and we're looking for things that happen over a period of time that we can identify and anticipate where the next move is going to be. And that's where I'll be as well, taking the short term advantage and opportunity as they present themselves. Okay. So that was my quick overview of Tesla stock split. Really nice. Brings the price lower for the average investor so that we all can participate and get some of the benefits of the appreciation in this company. So let's see what happens when the split takes place. Option prices are gonna be lower too, guys, because if you trade options, you know that right now it can be crazy. You can pay anywhere from 150 to $200 for a Tesla option, which is absurd. Yes, this thing moves 100 points, but not everybody has that kind of cash, to participate in 100%, in $100, $150, $200 option. So this is great news, but let's just play smart, because this is a strategic move on Tesla's part to preserve market capitalization, as well as bring the stock lower so that the stock can continue get bought up and push higher, hence more capital for the company to use for innovation. So it's all good stuff. Just stay tuned, subscribe if you haven't already, hit that thumbs up, and I look forward to seeing you in my next video.